All right, traders, welcome to today's recap. This is Christian from Stock Market Trade Group, and it is Wednesday, May 4th, Fed Day. What a day. Crazy always these Fed days, they're very difficult to predict. You kind of try to come in with a little bit of a viewpoint based on positioning, expectations, sentiment, and then you can kind of, think about things a little bit openly. But let me get into that a little bit further. Let me give you the risk disclaimer first. Everything that we're going through is for information purposes only, not giving out any advice or recommendations. So let's talk about that for a minute. Everybody's going to be giving their 2 cents regarding their interpretation of the Fed meeting and what Powell said. So I, of course, am updating, the trading room all day on headlines and so forth and some of the key things. And really, for me, the expectations coming into today that they were going to raise interest rates by 50 basis points, that was priced in. What was the question mark was whether or not they were going to do more than that, 75 basis points, and really what the future path of interest rate hikes are going to be. Now, they are going to continue to raise interest rates, right? That is something that is a headwind for the market. You could guesstimate how much is priced into the market, really, because that's the key, is what is priced into this market at this point. And really where this market kind of changed or was the pivot for the day. Powell basically came out and said that they are not, they are not looking to do 75 basis points in the next Fed meeting. That, and the market kind of took off on that, right? If you remember a few weeks ago, Bullard, we heard Fed speaker after Fed speaker after Fed speaker be extremely hawkish. The lead hawk was Bullard, talking about how that there should be a 75 basis points rate hike, and that really kind of set the tone for where those expectations were. So for Powell to come out, today and say that they're not looking to do the 75 basis points, and 50 basis points a couple of times is probably going to be what it is. And then he even made a little bit of he mentioned that eventually they'll go down to 25 basis points once they're kind of happy with where they are. So this is the screen on Bloomberg of interest rate expectations. So really, I don't want to get into the nitty gritty of this. I want to talk about some of the movers. This is just something that over time, that being in the market, you kind of learn that the market does price things in, and it's all about buy the rumor, sell the news, a lot of times, and I think what we've seen with this price action over the last couple of months is the market really pricing in that the Fed is going to be contracting the balance sheet and is going to be raising interest rates. So that damage, I think, has largely taken place. I don't think it will be, just to have realistic expectations, right? You still have to realize that that the Fed is going to be raising interest rates, right? It's just the question of how much is that priced in, and in what names, right? We've certainly seen names, the higher growth names that are not making a profit yet, right? Those have come down so far that so many of those names are back to basically where they should have been, right? And again, you could argue this whether or not you agree with me or not, but in my opinion, many of these names that took off and just got to 40 times price to sales, 30 times price to sales, that's not realistic. And that's what we dealt with, over the last couple of years. And that is kind of come back to where things more or less should be. And you could argue that some of these things are still expensive, right? So that's my kind of quick take on that. Bottom line is, if you're not even watching any of the headlines, what you did see is a change in breadth, right? And we could look at that basically on the 5-minute bar. You could look at our breadth indicator. That's something that I was kind of noticed all day, that the breadth wasn't very, it was kind of negative, right? And then right at the press conference, again, I say this all the time, so I'm blue in the face. Said it in yesterday's video, said it pre-market, said it in our midday video, right? The headlines that come out at 2 o'clock, the actual Fed decision, it is important, but what's more important is the press conference. So that's where you saw things shift around. right? Here was a little bit of a move back here in S&P, no breakdown, but once he started to provide some context, and again, it wasn't even in his opening speech, right, that he gave that context about no 75 basis points. It was in the Q&A portion of the Fed meeting. So I say this just because I led into this, of course, and I'm not the only one who knows this, right? This should be something that you're familiar with if you've been trading for a little bit, right? Is that it's the press conference of the Fed meeting that really where you get the context of what they're really looking to do, when those reporters kind of ask those in-depth questions. So that's where the market really kind of flipped around. The press conference started at 2:30, and really you started to see things move, about 15, 20 minutes into that meeting. So where are we now? Let's go through the indices quickly, and then I'll talk about a bunch of movers. There's going to be, people are going to be posting charts now all over the place. And so you got another level to watch here. So bottom line is, and I don't know, can I do this victory lap now, or do I have to wait till the end of the week? Remember, I talked about how the 80% rule was not done leading into this week. Well, we got that Monday morning, right? You could watch my video on Monday specifically talking about how the 80% rule in the value areas needed to be complete, right? Again, 80%, not 100%, but 80%, which is a pretty good number, right? We've got that, right? And you could watch any of my videos this week. I talked about the 80% rule in the S&P, every one of these end of day videos this week. All right. So that's a good thing, right? Now, I would watch the low, that level again is going to act as support, right? Which is 40.71. The next area of resistance, and this is resistance that can be overcome, but you have to kind of see, right? That's 4276, right? And we'll see, because basically, what happens with this market, I came into today heavy cash, right? Because I'm being patient, waiting for better price action, also preserving my confidence, right? So now, we've got something. Let's see if we can build off of this. But keep in mind, if you feel like you missed something or missed anything, you didn't miss anything, because the S&P chart is still below the 200-day moving average. It's still in a downtrend, guys. It's below the 50-day moving average. Where's the 50-day moving average? Here. It's below the 20-day moving average, and it actually stopped at the 20-day moving average. The only thing that we did today was get back above the 5-period moving average, and we just slightly closed into value for the week. So again, we'll see if we can continue to have some follow through. The level that I was watching, that I quoted yesterday as well as this morning, was 41.83. I thought that would be a pivotal level, and it was. You could see all the resistance there. Once we finally broke in, we went, right? And definitely back and forth price action. Let's look at the Nasdaq for a minute. Now, again, this did not get completed in terms of the 80% rule, and we don't know if we're leaving that for later in the year. But the other thing is, again, it's not 100%, right, that we're going to go to the bottom of value here. It's 80%, and we're sitting here and it's May 4th, and we don't know how the rest of the year is. I do want to bring, I didn't talk about this in yesterday's video. We certainly talked about it in the trading room yesterday, but I do take note of when big things like this happen. And this was the notes that I provided. There was this big bull risk reversal that happened yesterday in the Qs. If you're not familiar with what a bull risk reversal is, it's when you buy calls and sell puts, right? It's extra aggressive because you're adding that layer of selling puts. They did this, very strategically. Sometimes I give option activity a hard time. This was a pretty savvy order because they were taking advantage of higher volatility to get $13.80 by selling the 275 puts, right? And this is the Qs chart from yesterday. Here's the strike. So as long as the Qs don't go below 275, right, they're going to collect this $13, and they're using this to basically to finance, right, to finance the December 345 calls, right, which was at 345. I'm sorry, yeah, 345 is all the way up here, right? nice looking trade, right? It's a net debit. You know, it's about $4. I think I actually wrote it out here. $4.11. They're paying for that, right? To get a pretty, you know, to get a pretty decent size leverage, right? It's a $26 million trade on the call. So again, we went over this yesterday in the room. I didn't get a chance to go over it in yesterday's video, but I thought that that was notable, right? We don't see notable trades like this every day, especially, you know, we've been seeing more put buying in the indices. So this struck me as different yesterday. All right. So and again, they're going out to December, right? They're giving it time, you know, plenty of time for this to happen. So again, if that's a trade that you like, that's still in play, you know, considering we did go up 3% today, but you know, we're not all that far. It's not like we're up 10% from where this trade happened yesterday. Let's go through just a couple other areas of the market. Let's start with a couple of the let's go through some of the bigger names just for a quick second. I traded Apple this morning, you know, for like a scalp trade, and it wasn't really working. You know, remember this morning, the market, the Qs were down like almost 1.5% this morning. So Apple did take out that version point of control at 166. So if you're watching Apple, what you want to see is it basically maintain, you know, or get back above 166. So I do like what Apple is doing. You know, it's got to get through some of the short-term resistance, but it's a good start. It's a good start for Apple. You know, remember when Apple reported earnings, they had a really good quarter. This is what I tend to look for. I tend to look for quality names that had good earnings, that just the environment really just stunk when they reported earnings. So again, you haven't missed anything because it's basically back to where it was where it reported earnings. But, you know, let's see if this company wants to start to lead again, right? And you've got the 200-day moving average. So here's what I did. Right? I did a lot of trading today, by the way, right? When the setups aren't good, you see me try to, you know, I try to sit on my hands. Look, you know, I went kind of crazy today because again, I like the opportunities. And if, you know, if you've been trading for a while, right? I always get this question from younger traders that come in, you know, and they're like, hey, I want to make X amount of money every day. And I'm like, well, that's great in practice, but in real life, it's impossible to make the same amount of money every day. Why? Because the opportunities sometimes are just not there. This year has been a lot different than the last couple of years, where you've had to be really patient, right? And realize that sometimes the environment is just not good to be committing a lot of risk. So you can't be worried about that number that you're trying to make for the week or for the month. You've got to trade what's in front of you. You've got to trade the market, you know, and then try to get a little bit more aggressive when you see the opportunities. That's what I did today. Yeah, so here's my Apple trade. And then what I did is I actually just threw a little bit of some short-term calls, June 175 calls. If this thing wants to get going, again, I'm not spending much for those, but I would like to give it a shot now that Apple looks a bit more healthy again, and it's not that expensive of a company. Another one that I thought had good earnings, and this is a name I gave my analogy yesterday. A bird in the hand is worth twice than two in the bush. I actually traded that again today. I did not hang in this trade through the FOMC. That's fine, but it'll be one for me to watch. Again, issue is here that Google is still in a downtrend, but doesn't mean it can't stop bouncing. What I've really been, thinking, finding where there's relative strength, because I'm always looking at where there's market leadership. It's been in the energy names again. Look at Exxon, take out the highs, right? So very impressive for the whole energy space. It still looks, very healthy and making some nice moves. My trade that I kind of set up from last night, I posted a lot of trades. Sorry, I posted a lot of charts and setups in the TTG chart channel that we have in Slack over here. And one of my favorite setups from this morning, and it really didn't work for the majority of the day, was this LTHM, which is a lithium name. And usually these lithium names kind of go together. So I actually bought some here pre-market. Here's what LAC looked like Again, I got a little bit lucky with this. And ALB reported after earnings and had some really good numbers, which is another lithium name, right, in the material group, right? Let's see if I mean, look at this thing. It's up to 254. So LAC reports tomorrow. I'm still holding some, but you can see this thing's trading up to 29.40 here after hours. Again, it's going to have to deliver on the earnings report, but I just thought that this was a pretty good setup considering where the price was right at the 200-day moving average, with LTHM reporting really good numbers in the lithium space, ALB reporting good numbers afterwards. But I'll tell you, this is where there's been some really good strength in the market. We talked about this yesterday. Look at what the chemical companies are doing. This is LYB, right? This is CC, had a huge day, right? I mean, this was even before the Fed meeting. These names were acting very, very well. So again, I like to find where there's relative strength, where there's market leadership. Just about, a week ago, we had no market leadership. It was kind of still energy, but energy wasn't, it was kind of sitting there at the 50-day moving average, most names in the group. Look at OLN, right? Another one too is Dow. And I think I covered these in yesterday's video, or at least a couple of them, but look at the follow through from these names. Very, very impressive. And again, nice to see a different group, because they've been acting decently, but very interesting to see the chemical names. Again, there's no chemical ETF out there. The closest that you're going to get, I think, is this IYM, which I am long this as well in the TTG trend portfolio, which is up 3% today, just broke into value. It has a little bit more exposure to the chemicals than XLB has, which also had a good day, which is the ETF there. One or two other things to bring up, which I thought has been interesting, is, again, this is a really beaten up area. This is Sunrun. Look at Sunrun go up to $27. There's a theme here, right? The solar theme. Even in a tough market, ENPH had good earnings, right? This was last week, managed to kind of hold in here, almost filled the gap on earnings day, right? And then look at SETG, which has kind of had a rough run of it. Get that little joke, Sunrun. And then Generac, which is another name that's been totally beaten up, was up 12% on earnings. So I think these will be interesting to watch. Again, some of them are beaten up. I tend to go towards the better looking chart, right? And for me, that's probably ENPH. But interesting, again, seeing some themes kind of play out a little bit. A couple things I'll just go over. Listen, we could talk about today's movers for another 15 minutes. I don't really want to take all your time up, but I thought the home builders, my goodness, I thought that they were kind of set up. They were up 4.8%. So again, sometimes when you have this kind of change in connotation, change in context that Powell gave us today, some of these beaten up areas are going to rally pretty hard. Look at what the home builders did today. So I traded some Home Depot. Home Depot is still beaten up, but I'm a fan of Home Depot. So I traded this one today. This worked pretty well. I was taking targets, a lot of targets, as Powell is speaking, because you never know if he's going to say something different. But this worked pretty well. 315, and I'm still holding some of those. Right. I also traded TQQQ. Look at where I added this TQQQ right at 247. Once I saw the market kind of gain, pick a direction and go. Again, patience is key on these Fed days. ON Semiconductor, this was a name that I added the other day. Again, sticking to names that have good earnings. ON Semiconductor had great earnings, right? They gave me a little bit of a retest, right? And I re-added, because I took a target at 57 the other day. I re-added into the weakness this morning. 55.30. All right. Like I said, I kind of went nuts trading. I'll tell you what was, and this is where I'll end the video for the day, but the cyber group, holy cow, what a reversal. I got stopped out in a trade. Guys, this happens. There's nothing you could do about it sometimes, right? Break of the 50-day moving average, a name that I've been trying to hold and stick through, breaks down all the way down to almost $52. So I took my stop, right in here, and it reversed. So I put the trade, I put it back on, right? And it's pretty amazing when you look at this group. Look at what happened to Palo Alto, right? Big hammer bar. Fortinet reported after the close today, but you talk about it, they were taking this group out to the woodshed today. Right, another one that hasn't looked healthy, right? So this one's up to 305, right? You're going to have some resistance there at 312. Some people were talking about AMD, right? Took out two of these VPOCs, and then started to kind of fade, right? It was kind of bleeding in terms of giving back the profits. So this is good. I would watch this 97 level. Daily chart, I'm going to have a nice level for you because it's still, the problem with some of these names, they've got overhead resistance. I would watch 99.50, right? It's going to have to get above 99.50. And then last one in the semi group, also really beaten up here the last few weeks, was Nvidia. You could use the 1 hour chart, basically use, watch this 195 level. If you want a closer level to watch this 200 period moving average, which is around 199. We'll leave it there. Guys, if you have not tried the TTG membership before, right, we're actually, I hardly ever run specials, right? You get 25% off your first month. You could go ahead and just click on this link, or you could go right to my profile page. You could click on this this link in here. The coupon should already populate for a little while longer. So I think for a couple more days, I'm running that special, and that's it. But a great opportunity to check out the trading room, see what we do on a day-to-day basis, because we've really been kind of really putting a lot of research to try to find where the market strength is. How could I forget about this group, right? So the very last group we'll talk about is the refining group. Unbelievable how strong this group has been. Strongest area of energy. Just a couple weeks ago, Valera was at 105, at 128. It's a big move for an energy stock. All right, guys, we'll leave it there. Have a great night. See you tomorrow.